Biomed, Nexus Daily. Updates your essential biotech, medtech, and pharma recap. No noise, just what matters. TLDR Novo Nordisk sued Lilly in federal court over what it calls misleading GLP-1 advertising. The two obesity giants competing on data and price are now fighting in court too. Novartis opened the week's big pharma earnings with 3% sales growth and reaffirmed 2026 guidance, a steady start after J&J's soft open. Anthropic deepened its work on rare disease drugs, extending the AI drug discovery push we have tracked all year. Axiom Biosciences plans a Hong Kong IPO, a US biotech betting on an unconventional path to public capital as 2026 tracks toward the most IPOs since 2021. Agios discontinued its sickle cell drug tebapivat after a Phase 2 failed to show a differentiated profile. Executive takeaway: the GLP-1 fight just added a courtroom. Novo Nordisk sued Lilly in federal court, accusing its rival of misleading advertising around their obesity and diabetes drugs. Think about what this signals. Novo and Lilly already compete on efficacy, where Lilly's tirzepatide and retatrutide have set the pace, on format, where both are racing oral versions to market, and on access, where the Medicare bridge opened the field. Now they are competing in litigation. Companies sue each other when the commercial stakes are high enough that a marketing claim is worth a federal case, and few stakes in medicine are higher than the obesity market, which analysts see topping $150 billion. When the two dominant players go to court over advertising, it tells you the competition has moved past friendly rivalry into trench warfare. For Lilly, riding high on its deal-making and its franchise, it is a distraction and a reputational risk. For Novo, working to close the gap after a rough stretch, it is a way to blunt a competitor's momentum on a front other than the clinic. Watch whether this stays a narrow advertising dispute or escalates into something broader. On the week's thread, earnings are rolling in and the early read is steady rather than spectacular. Novartis posted 3% sales growth and reaffirmed its 2026 guidance, a solid, if unexciting print that stands in contrast to J&J's oncology stumble. The picture forming is one of a sector that is healthy but not uniformly so, where the strong franchises hold and the weak spots show. That is exactly what we said to watch for Monday. As the bigger names report over the next week, the question is whether the aggregate confirms the buoyant mood coming out of BIO or complicates it. So far, it is a mixed but reassuring start. Read full analysis. GLP-1 Novo took Lilly to federal court and the obesity war has a new front. NVO, LY Novo Nordisk, sued Lilly in federal court over what it describes as a misleading GLP-1 advertising campaign, according to the Pharma Letter and Stat. The suit puts the two dominant obesity and diabetes players in direct legal conflict on top of their commercial rivalry. The GLP-1 market is the most valuable in medicine, and the two companies have been trading blows on efficacy, oral formulations, and access for over a year. A lawsuit over advertising signals the competition has intensified to the point where marketing claims are worth litigating. For Lilly, it is an unwelcome distraction amid a dominant run. For Novo, which has been working to regain momentum, it is a way to challenge a rival outside the clinic. The specifics of the claims will matter, but the bigger signal is that the gloves are off between the two giants of the category. Earnings Novartis gave the week a steady start. NVS Novartis opened the week's big pharma earnings with 3% sales growth in the second quarter and reaffirmed its 2026 guidance, according to the Pharma Letter. It is a steady, inline print that contrasts with J&J's softer open, and it fits the picture we are tracking this week, a sector that is broadly healthy with the strong franchises delivering and the occasional weak spot showing through. Novartis has been one of the more disciplined operators among the majors, with its molecular glue and ADC deal-making and its recent Fabhalta approval in kidney disease. A reaffirmed guidance is the kind of quiet confidence that does not make headlines but tells you the underlying business is performing. The bigger tests come as the rest of the majors report over the next week. AI Anthropic pushed deeper into rare disease drugs. Anthropic expanded its work applying AI to rare disease drug development, according to STAT, extending the steady march of AI into drug discovery that we have tracked all year. Rare diseases are an interesting proving ground for AI since they often involve well-defined genetic drivers but tiny patient populations that make traditional development economics hard. If AI can lower the cost and time of finding and designing drugs for these conditions, it changes what is commercially viable. Separately, a major pharma is building what was described as the most powerful, single-owned NVIDIA computing infrastructure in life sciences, a reminder that the industry is investing in serious compute, even as leaders like Anthropic's own CEO counsel patience on how fast AI will change the science. Capital Markets, a US biotech, is trying the Hong Kong IPO path. Axiom Biosciences plans to go public in Hong Kong rather than the US, betting on an unconventional route to raise capital and build a global company, according to Biospace. It is a notable experiment. Hong Kong has been a magnet for Chinese biotech listings, and a US company choosing it signals both the depth of Asian capital and the appeal of a China-facing investor base. It comes as 2026 tracks toward the most biotech IPOs since the 2021 peak, with 18 companies public so far. Whether Axiom's path becomes a template or a curiosity will depend on its reception, but the willingness to try tells you how global the competition for biotech capital has become. The IPO window is open, and companies are getting creative about where they step through it. Quick hits. Agios discontinued tebapivat for sickle cell disease after a Phase 2 study failed to establish a differentiated profile, a clean example of the fast prioritization calls cash-conscious biotechs keep making. Dyne Therapeutics got an early 2027 decision date for its Duchenne muscular dystrophy therapy, with analysts expecting a smooth review, adding to the busy Duchenne regulatory calendar. EMD Serono may trim its R&D workforce by up to 70 per Biospace's layoff tracker, a notable move from the US arm of Merck KGaA as it integrates its recent Bio-Techne purchase. Lonza and Engitix teamed up on targeted ADC development, more evidence of the CDMO sector building capability in the industry's hottest modality. Coming up, this week and next, Q2 earnings continue for Big Pharma. Late July, BMS KarXT Alzheimer's psychosis readout, PTC sepiapterin PKU readout. Today, July 22nd, comment window closes on the FDA expedited IND pilot. July 31st, Section 232 pharma tariffs effective for large companies. August 2026, Replimune RP1 FDA response, read, full analysis Biomed Nexus Pro. Institutional intelligence brief, what Novo suing. Lilly, really, signals litigation between the two dominant GLP-1 players is worth reading as a strategic signal, not just a legal event. Companies pick these fights when the commercial stakes justify the cost and distraction, and the obesity market is the highest stakes arena in medicine. The context matters. Has been winning. Its tirzepatide franchise set the efficacy bar. Retatrutide is coming with best-in-class weight loss. Its oral Foundayo is in the market. And Evaluate projects the franchise becomes the biggest blockbuster ever. Novo, which created the category with semaglutide, has been on the back foot, working to defend its position with oral Wegovy and its pipeline while absorbing setbacks. When the trailing player sues the leader over advertising, it is often a sign of competing on every available front, because the clinical front alone is not enough. That does not mean the suit lacks merit. Advertising claims in the GLP-1 space have been aggressive on both sides, and a genuine violation is worth challenging. But the strategic subtext is that Novo is using every lever, including the courtroom, to slow Lilly's momentum and protect its share. For Lilly, The risk is less the legal outcome than the distraction and the reputational noise around its marketing at a moment when it is otherwise dominating. The read for the market. This is a sign the obesity competition has matured into a full-spectrum rivalry, where the players fight on data, price, format, access, and now law. That intensity is good for patients who benefit from the competition, and it raises the cost of competing for everyone else eyeing the category. For the two principals, expect more of this, not less, as the stakes keep climbing toward a market measured in the hundreds of billions. Watch whether the dispute stays narrow or becomes a broader legal campaign, because a widening fight would start to consume real management attention on both sides. The uneven sector earnings are revealing. Two prints in Q2 earnings are sketching a picture worth paying attention to. J&J opened soft on an oncology miss. Novartis came in steady with 3% growth and reaffirmed guidance. The story forming is not boom or bust, but unevenness, and that is the nuance that matters. The bullish narrative coming out of BIO and the M&A wave was that the whole sector had turned. Earnings are testing that, franchise by franchise. Novartis performing while J&J's oncology stumbles tells you the health is real but not uniform, and the differences track execution and portfolio exposure rather than a rising tide lifting all boats. So this matters for how you read the rest of the season. As the big names report over the next week, watch for the pattern rather than any single number. If the strong companies keep delivering and only specific weak franchises miss, the sector is healthy with normal dispersion. If misses cluster across multiple companies in the same areas, oncology being the one to watch after J&J, it signals something more structural, like pricing pressure or competitive intensity biting into what were reliable growth engines. The through line we have flagged for months applies here too. The top of the industry is flush, but flush is not uniform, and the earnings season is where the unevenness becomes visible in hard numbers. Our base case remains that the sector is genuinely healthier than it has been in years, but the J&J miss is a useful reminder that sentiment and performance can diverge, and the second half will be judged on the latter. The Hong Kong IPO experiment Axiom Biosciences choosing Hong Kong over a US listing is a small story with an interesting signal about where biotech capital is flowing. It is worth understanding why a US company would make this choice. Hong Kong has become a major venue for biotech listings, particularly for companies with Asia-facing strategies or Chinese investor appeal. Its rules have evolved to welcome pre-revenue biotechs, and its investor base has appetite for the sector. For a US company, listing there is a bet that it can access deep Asian capital and position itself as a global rather than purely American company. The move also reflects the broader China dynamic we have tracked all year. As Chinese science and capital have become central to the industry, the lines between US and Asian biotech are blurring. A US company listing in Hong Kong is the capital markets version of the same trend that has Western pharma licensing Chinese assets and building new co-structures around them. Whether this becomes a real alternative path depends entirely on Axiom's reception. If it prices well and trades well, expect other US biotechs, particularly those with Asian strategies or China-sourced assets, to consider the route. If it struggles, it stays a curiosity. Either way, it is a sign of how global the competition for biotech capital has become, and a reminder that the US public market is no longer the only game for a company that needs to raise. In a year already tracking toward the most IPOs since 2021, the venues themselves are now in competition. Coming catalysts, Q2 earnings continue over the next week. Late July brings the KarXT and Sepiapterin readouts. The full catalyst calendar returns Friday. Novo took Lilly to court, and the obesity war has a new front. Novartis gave earnings season a steady start, and a US biotech is testing the Hong Kong IPO path. What are you watching? Reply to this email. Visit the Pro Hub Read. Full article sponsorship slots for 2026 are limited. See packages and pricing. New Biomed Nexus signals weekly sales intelligence for life sciences BD teams. Learn more